Welcome to this Bell Direct monthly update. I'm Julia Lee, an equity strategist with Bell Direct. And with the end of financial year, the Australian share market has managed to clock up another year of positive gains. We've seen the ASX 200 index up by 9%, and including dividends, that's a gain of 13.5%. But it is the small end of the market that has been doing a lot of the heavy lifting. We have a look at the top 20 blue chips on the market, the 20 biggest companies. They're only up by 5.9%, but the small ordinaries index has hit it out of the ballpark, up by 22.7% for the financial year, and the mid-cap index up by 12.2%. In terms of individual stocks, there's been some pretty impressive performances. In the ASX 200 index, we did see the top three performers gaining more than 200% for the year. We saw Appen, which looks at language services, up by 242%. Afterpay, which looks at payments for retail transactions, up by 210%. And Beach Petroleum in the energy space, up by 210%. I guess the thing that stands out about the top performers is not only have they done well on a 52-week measure, but they also did well on a monthly and quarterly measure as well. And it really demonstrates the upgrade cycles that these companies have been stuck in and continue to benefit from. On the bottom, though, we saw Telstra down, G8 Education in the childcare space down 35%, and AMP in financial services down by 30%. Both Telstra and AMP stuck in a downgrade cycle at the moment, and that's been impacting on share prices. Of course, when we have a look at sector performance, it's been quite interesting here. Most of the sectors on the Australian share market have seen double-digit gains for the financial year. The only ones that really haven't are those related to the bond market. And the areas that are seen as bond proxies or defensive sectors include areas like telecom, utilities, as well as the banking space. And this is where we have seen some negative returns for the year. On the flip side, energy is up by 35%, with oil being a typical late cycle investment that does well, and that certainly has been the case here. Technology up by 33%, even though it's the smallest sector of the Aussie share market. Given the rally that we've seen in the Nasdaq, the technology sector has also kept up with that, and healthcare continuing to do well, up by 28%, really driven by CSL, which has been on an upgrade cycle in the financial year. Of course, looking forward, all eyes will now be on August full-year reporting season, and June is often known as confession season. This confession season, we have seen upgrades coming through from a number of companies, including CSL, Qantas, which is trading near all-time record highs, as well as Aristocrat Leisure. There's been plenty of downgrades too. We've seen downgrades from AMP, Amcor, Ausdrill, Green Cross, JB Hi-Fi, Invocare, Gateway, Ramsay Healthcare, Telstra, as well as Technology One. But what do you do in terms of strategy? Well, looking at the globe, I think there's going to be plenty of noise coming through with the escalation of trade tensions between the US and China. But look, that volatility that it creates also creates an opportunity in 2018 for quick investors. The fact is there's still plenty of liquidity around in this market, and we're still seeing inflation come through, and that should be a positive backdrop for shares going into the new financial year. So all up, hopefully it's been a good financial year for investors and traders. The ASX 200 index doing well with a gain of 9%, and hopefully we see another positive year of returns. I'm Julia Lee, an equity strategist from Bell Direct. Hope to see you next time.